A futuristic name does not make a regulated broker. Quantum Tradex, operating through quantumtradex.com, presents itself as an online trading and investment platform. The branding suggests advanced technology, algorithmic precision, and professional market access. It uses confident financial language designed to appeal to retail investors looking for opportunities in forex, crypto, or CFD markets. But once we move beyond the surface and examine verifiable facts, the structure raises serious concerns. The platform appears to offer leveraged trading services, possibly including CFDs on currencies, indices, commodities, or digital assets. The promise is access to global markets and potential profit from price movements. However, the central issue is not the marketing narrative. The central issue is whether Quantum Tradex is properly regulated and legally authorized to operate as a broker. Brief summary. QuantumTradex.com markets itself as a broker providing market access and trading tools. The website looks modern and uses professional terminology. However, verification through official regulatory registers does not confirm a valid financial services license attached to this domain. There is no clearly disclosed top-tier regulator publicly supervising the platform. Without confirmed regulation, there is no guaranteed investor protection. This creates elevated risk, including potential capital loss and withdrawal issues. General information. Project name, Quantum Tradex. Website, https://quantumtradex.com. Project type, online broker offering CFD-style leveraged trading. Regulation, not confirmed through major official registers. License, not publicly verifiable. Minimum deposit, positioned for retail participation, exact threshold not tied to a regulated framework. Leverage, implied use of leveraged instruments, but no regulator-confirmed leverage caps are disclosed. Domain registration, publicly available, WAS data indicates relatively recent domain registration compared to long-established brokerage brands. Registrar and DNS, international registrar services with privacy protection likely enabled, reducing ownership transparency. Now to the most important question, regulation. A legitimate broker must be listed in official supervisory registers. These include the Financial Conduct Authority in the United Kingdom at https://register.fca.org.uk, the Cyprus Securities and Exchange Commission at https://www.csec.gov.cy, the Australian Securities and Investments Commission at https://connectonline.asic.gov.au, or to the United States Securities and Exchange Commission at https://www.sec.gov, Edgar, Search Edgar, Company Search, and FINRA BrokerCheck at https://brokercheck.finra.org. If targeting Russian-speaking investors, the Central Bank of Russia warning list at https://www.tbr.ru inside warning list is also relevant. Verification through these official public databases does not confirm the presence of a valid license connected to quantumtradex.com. The legally accurate statement is essential. Checks through official supervisory registers do not confirm regulatory authorization for this domain. Without confirmed oversight by a recognized authority, the platform cannot be considered a regulated broker. Regulation is not optional decoration. A licensed broker must segregate client funds from operational capital, meet capital adequacy requirements, submit to audits, and provide structured dispute resolution mechanisms. An unlicensed broker has no enforceable obligation under recognized financial law. If a conflict arises, there may be no regulator to file a complaint with and no compensation scheme to rely on. Looking at the service model, Quantum Tradex appears to promote CFD trading. CFDs are complex instruments carrying a high risk of rapid loss due to leverage. In regulated environments such as the European Union or the United Kingdom, leverage for retail clients is strictly limited and accompanied by mandatory risk warnings. If a platform offers leveraged trading without clear reference to regulatory supervision or leverage caps imposed by a regulator, compliance concerns arise. Another critical factor is conflict of interest. Many unlicensed CFD platforms operate as dealing desks, meaning the platform may act as the counterparty to client trades. In such a structure, client losses can directly benefit the platform operator. In regulated markets, this model must be disclosed and supervised. Without confirmed regulation, there is no independent authority ensuring fair pricing, order execution integrity, or proper handling of client positions. WAS and technical analysis add further context. The domain quantumtradex.com appears relatively new compared to established global brokers that typically maintain long-standing digital footprints tied to regulatory filings. Ownership details are protected by privacy services. While privacy alone is not illegal, the combination of hidden ownership and lack of regulatory confirmation significantly reduces transparency. Short domain age combined with ambitious marketing claims is a pattern frequently observed in high-risk investment schemes. Established brokerage firms usually secure domains for multiple years and build a documented public record under regulatory oversight. A short registration cycle suggests limited long-term commitment. Legal transparency is limited. A legitimate broker clearly discloses its full legal entity name, registration number, governing jurisdiction, and regulatory authority. It provides a binding client agreement tied to enforceable legal frameworks. In the case of Quantum Tradex, there is no clearly verifiable top-tier regulator publicly tied to the domain. There is no confirmed investor compensation scheme. There is no transparent confirmation that client funds are held in segregated accounts under regulatory supervision. Key structural risk indicators include absence of confirmed license in official registers, absence of a named regulator tied to the domain, limited corporate transparency, no confirmed investor protection mechanism, elevated risk of capital loss, and possible withdrawal issues due to lack of enforceable oversight. How to avoid similar scams. Always verify a broker's license directly through official regulator websites. Use the FCA, SISEC, ASIC, SEC, or FINRA official portals and ensure that the legal entity name and approved domain match exactly. Never rely solely on badges or license claims displayed on a broker's own website. Be cautious with platforms offering high leverage without clear regulatory backing. In most strict jurisdictions, retail leverage is capped. Extremely generous leverage terms with no regulator mentioned are a warning sign. Do not trust certificates hosted on unknown domains. Real financial regulation is always verifiable through a government-run site. Pay attention to pressure tactics. If account managers push for urgent deposits, larger investments, or additional payments before withdrawal, treat this as a red flag. Check domain history and ownership transparency. A recently created domain combined with promises of advanced technology and easy profits is not a solid foundation for financial trust. Final conclusion. Based on publicly verifiable information, Quantum Tradex operating through quantumtradex.com cannot be considered a confirmed licensed broker. Checks through official supervisory registers do not confirm regulatory authorization. The absence of transparent regulation, combined with leveraged CFD trading risks and limited legal clarity, creates a high-risk environment for investors. Our experts recommend refraining from any financial interaction with this project. In financial markets, regulation is verified in an official register, not promised in marketing language.